It's the pre-market ritual you never knew you needed. Get ready to gap and go with the Calum Trading Institute.
All right, guys, welcome to another episode of Gap and Go. I think maybe we should talk few things about what happened last Friday, especially coming from our event. And I think a lot of things actually unfolded coming into this week. Jason, maybe you can share your thoughts and maybe summarize everything we talked about from a macro perspective. I think we started off coming from overbought conditions, valuations a little stretched. Then we're starting to see more volatility in the US, and basically that's what happened. After maybe a 10% drop in your NY fund, we've seen another 10% drop happen the last 2 to 3 days. Anything really changing from a macroeconomic perspective? We're seeing more tariffs, but maybe give everybody a general overview about what's happening.
Okay. So I think the boat is being rocked here a lot. Diba? So what I presented last Friday was that, after Trump kasi, diba, the market was so bullish on Trump, diba? Pro-growth, pro-stocks, So there were really record inflows after Trump won, diba? So that's what made the market go up a lot more, diba? And if you look at where the market came from, diba? Like especially the Mag 7, it doubled since the 2023 bottom, diba? So I think that the markets have run a lot. They have run a lot more after Trump, diba? And now I guess contrary to expectations, Trump is really rocking the boat a lot right now, diba? Like with all the trade wars, the fiscal austerity, with DOGE, diba? Tighter immigration, all those, diba? I think it's definitely rocking the boat. And if you look at the recent interviews with Besant, with Trump, so they've really signaled loud and clear that they're comfortable with pain in financial markets, diba? Kasi parang they're trying to have a grand plan of fixing the imbalances and all those things, right? Of overspending, of having to import everything, not producing anything anymore in the US, right? So parang tingin ko right now, all the people who are like buying the dip are getting disappointed, diba? Kasi parang it feels like the Fed put, it's like the fiscal put as well is lower than before. Kasi parang willing to tolerate more pain to fix the imbalances.
Sorry, before I reply to that, nakashare screen ba ako?
Yeah.
Okay, sorry. Wala kasing nakita. Wala yung green. Okay.
Oh, no.
And that's the thing, right? Deflating a lot of these expectations that are already happening by the market over the last 2 to 3 years. And we really consider that recalibration that has been happening over the last 2 weeks as something healthy. Now, we always talk about the narratives being built in the market. For the first time, I think maybe yesterday was the first time we've seen it, recession risk. And I think this word, and it's not really a bad thing, right, with regards to recession. It's just because you've seen DOGE come in, have its effects. I think coming from last Friday, we've seen a huge jobs report coming from the unemployment sector, especially from the government firings. We have inflation actually tomorrow, questions about growth. And I think all these economic data are now closely being seeped in by the markets. For the first time yesterday, they talked about the big R word, recession. Maybe share a little bit more detail on it. Is it like scaring people, or should be good, should be healthy?
I think it should be good actually. I mean, kasi parang big picture, it's really correcting all the imbalances, diba? And for me, if may recession, of course, Fed is gonna cut rates, right? So parang for now, they're talking tough, but parang tingin ko at the end of the day, this is going to set the market on a more sustainable path, diba? But yeah, I do think that short term, there's a lot of volatility. Diba? Kasi parang if you look at something weird that's happening today, stocks risk off US and the dollar's going down at the same time. So usually risk off akit yung dollar, safe haven. right? So I guess today it's something different happening out there because of Trump and all those things that they're both going down at the same time. Diba? So parang for me, this could set off really a big, decline. Diba? Kasi if you're a foreigner, you're losing on the stock price and you're losing also on the currency. Right? So parang, yeah, just have to be careful with the volatility.
Okay. A lot of noise also continue to happen from the tariffs and 50% on Canada reversed, I think 2 hours ago. Brian, maybe you can share your thoughts underneath the surface. Long, short, what are you seeing?
We're out a lot of the excesses of last year's narratives, diba? Yung mga theme issues like quantum computing, diba? IONQ. Like IONQ is year to date down 50%. Used to be the darling of this market.
Marami ako dito.
Diba? Down 68% from the peak. All of these things. So this is all the effect of this correction, all the effect of, as Jason said, America first policy, diba? Tariffs, DOGE, and everything. So all these things that the Trump administration is doing is maybe good for in the long term, in the long run, but really painful in the short term. But they're willing to take that pain in the short run.
Yeah.
If you're asking if there's any reason to panic, if you look at although you will see that the equities are really down bad, if you look at the credit spreads, tama ba, Jason? I think it's still showing stability.
Yeah. Parang tingin ko stocks na talaga is really heavy.
So
Heavy positioning.
usually, if that happens, if the credit market is stable, and the stock markets are selling off, usually it's exaggerated. Parang most of the funds are looking at it as an opportunity to buy at cheaper prices. Kasi wala pang quote-unquote systemic risk. Diba? So,
Even on the VIX,
yeah.
diba? Walang panic eh.
Wala
I mean,
eh. Sa credit market, wala eh. Tight
you
pa yung spreads. So usually that's the ugly sign eh. When spreads are rising. That's an ugly sign. So but so far wala. And that's why there are a lot of bargain hunting happening today, which I think anytime now probably you'll see a major rally. Although even though I'm not saying the sell-off is finished, but parang the sell-off doesn't come with just going down the straight line. Eh. Parang siya, may series of rallies. Eh. And if you see the CTA numbers, yung mga commodity traders association ba yun, parang naka-short na sila eh. So yung mga trend traders parang bigla na silang parang after the sell-off na sobrahan yung selling, naka-short na sila. So some of those signs we're seeing parang extreme fear causing this would probably cause this bottom probable rally. But so far there are still no, if you're talking about relative strength, there's only a few that I see, mga TGTX, only a few, mga ASTS, yung mga ganyan. 95% of the issues are ASTS, 95% of the issues are binentahan talaga.
base companies mo.
So basically, for traders, it's time to really look at your it's either you're looking to trade the capitulation, if you guys know how to trade it, or you just stay with the relative strength.
Yeah, no, I love it. I love what's happening today. I think it's healthy in the long term. Yes, there's severe volatility that's happening, but I really think that a lot of these things, I think the question really being is there systemic risk? And it's always, you don't see it before it happens. But in this scenario, when I look at let's say, for example, like on the financials end, I don't see a reason why we'd have a systemic risk. Everything, like what's happening today, in my opinion, everything has been very efficient. So weaker equities, people flying to safety. That's the reason why your bond markets have been outperforming. Doesn't really share anything that's scary. Maybe on the dollar end, you're seeing more outflow happen, um, going into largely the euro. And we can talk about really the biggest winner so far in a bit, which has been China. Anything last things to add, Jason?
So yeah, I agree. Parang no systemic risk. I think it's really largely a matter of positioning, right? Yun nga, a lot of people were sucked into the US exceptionalism narrative, and they have been very exceptional for the past 10 years. But I think like largely because of that, like if you look at, I read somewhere that if you look at savings ng mundo, 70% is actually in the US. Diba? I mean, it makes sense. Just look at how big the Mag 7 went up in the past 10 years. How well the dollar performed in the past 10 years as well. Right? So parang tingin ko na talaga, it's really, the Trump thing is really rocking the boat big time. Diba? And parang actually, if you look at it now, wala siya sinasabi about the stock market. Right? So
Oo.
what he's saying is that I want to build a strong country. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters. Yun sabi niya.
Yeah,
Right?
right now they're focused on Main Street. So, diba, all those tariffs they want to negotiate to bring down income taxes, diba? That's the goal. Income
So
tax.
parang they want to build stuff again in the US. Right? So,
So yeah, it remains to be seen that eventually, hopefully, they'll be successful. But I think part of this sell-off was also exaggerated by, again, America First policy, China getting, parang closing their investments in the US, most of it in NASDAQ. So a big part of it is selling the NASDAQ index, NASDAQ index issues. That's why you really see very fast, exaggerated moves being done. And going to China, so what will they do with all those money that they are repatriating, diba? As you can see, what's happening in China, they've grown their debt market. I think last week, a lot of issuances ng government. So just to be able to, I guess, absorb this capital going back to the country. So I think that's the dynamic now. Money moving out of the US, especially from China. But Chinese money, tapos then going back to China. That's why China is a bull market and then US is a...
I think
Charts right now. Sige, Jason, kwento mo na rin nangyayari dito. I have two charts right now. Obviously, the first one's US. Second part is Hong Kong and China. Is things really changing? Maybe you can do that introduction for us as we get into EMs.
I think globally, a lot of major narrative changes diba? Like, okay, sa Europe muna. So I think that if there is peace in Ukraine, parang tingin ko you're gonna see a major shift in capital back to Europe as well. Diba? Kasi parang tingin major factor yun eh. So going back to China as well, so parang same diba? So I think that you're seeing also that na parang okay, the China model works as well. Right? Like people see, wow, they have like DeepSeek. Okay, not that behind. Wow, they see BYD. It's like the biggest automaker in the world. They see the China trade surplus in 2024, record 1 trillion. So parang despite everything, and maybe because of the trade wars, kasi parang necessity is the mother of invention, right? Now you have to be, resilient. You have to do something drastic to stay afloat in this, economy right now, global economy, full of conflict, diba? So yeah, I think markets are starting to see that this year, and yeah, rise of the dragon.
Hmm. Okay. I think that's exactly what's happening. And the difference is today, is it going to be something more sustainable than it was before? Um, Monetary policy, 0% interest rates, fiscal policy, um, also very stimulative on Hong Kong and China end. Valuations, cheap. Probably the biggest reason why they're cheap also is because of skepticism and because nobody wants to buy China in their portfolios, and they probably don't have China in their portfolios.
Mm.
So actually, we're seeing a lot of catch up now happen with regards to Hong Kong. And I also agree, you guys are correct. In terms of innovation, in terms of technology, BYD leading the way, Xiaomi almost triple over the last 12 months. Other winners in the EV space, second largest in terms of selling from the cheap China EV, and you have XPeng, and then all the others, including the DeepSeek and the LLMs, and that's the reason why Alibaba has also rallied tremendously. Um, and that's the thing, is it just the beginning? I mean, how do we view these things? Every single drop that happens, for me, it's normal because you're seeing volatility that's happening outside. One of the biggest question marks coming from the event also last Friday was that it could be decoupled, meaning could Hong Kong, China decouple versus the US? And to some extent, yes, you might see some volatility, but it looks like the first ones to bounce looks like it's going to be China. Kurt, if you guys agree or disagree, let me know also. I'd like to hear your thoughts on it.
The couple, in a sense, I think the word is, they say divorce from the US. The couple, in a sense, kasi they can't because they're still producing the, diba, manufacturing components for the US.
Well, I think if we're talking about the market, then I think the couplings are rare, but obviously what's happening, I think we have to give it the benefit for the doubt. Sobrang lakas right? And usually, if something really decouples, it means that something big is happening, like big macro narrative, diba? So, parang for me, I mean, the price is saying it, right? The price is supporting it.
In terms of performance, probably, you might see a more sustained bullish move for Hong Kong, for China than the US. At least this year, diba? Or you see it under-owned the China market.
I think also, like, if you look at history, if the US market is going down but the dollar is going down as well, usually may chance mag-decouple.
Okay, this is very different. Guys, when you talk about China, it's very different also from what's happening from the market. Things that we talked about also coming from Friday was China slowing down, and you're seeing all the other manufacturer companies and export-oriented countries get demolished over the last few years. Leading that demolishment is Thailand. You have weakness also coming from Indonesia. The one positive end was actually the Philippines, notwithstanding any political unrest that's been happening, especially with the arrest last night. But in terms of the economy, actually, the Philippines has been in a better position than our peers. You want to talk about emerging market really quick?
Yeah.
Philippines?
I think we showed a lot of nice slides this Friday, right? That parang the ASEAN story just got more complicated. I mean, once more, it's all about China. Because we said that, okay, China's doubled down on being a manufacturing powerhouse. But I think that right now, some countries, like if you are in the same value chain as, Chinese companies, you're dead, right? And I think Thailand was the one that's most affected. Like if you look at their capacity utilization is went down from 70% a few years ago to 60%, diba? And as Edmund said about it, there are over 100 factories in Thailand closed down. mostly in auto manufacturing. Parang tingin ko yun yung mga Japanese eh. Diba? So it got more complicated. Indonesia's also hit a little to a certain extent. And actually Malaysia is not so affected. Although they may konting problema sila kasi yung deep sea chips daw mga dumaan ng Malaysia. And I think Vietnam is benefiting, but kasi they're mostly integrated with the Chinese supply chain. And Philippines, so our weakness has become our strength kasi we don't have manufacturing. We're heavy on like service exports, right? People. So maybe that explains some sort of decoupling from the general weakness in ASEAN.
As much as we don't want to touch on political concerns, because usually it's out of our control. You think last night might see any impact in equity flows going forward the next 2 weeks? I'm sure mawawala lang din naman yan, diba? But you think there's going to be an impact the next week? Just curious.
I don't know.
May
For me,
hawak
it's
ba sila?
entertainment.
May hawak ba sila?
Feeling ko kalakuan lang na doon lahat. But,
I mean, ever since politics hasn't been our strong suit anyway.
Okay. Good parts about the Philippines. You're seeing several companies, like what we talked about, start to announce buybacks. I think highlight maybe last week was SM announcing a 60 billion buyback. Fourth quarter earnings so far have been positive, in my opinion, weak on the property. But if you look at it from the consumer perspective, fourth quarter has actually been very good. SM retail up 30% earnings. All the malls, double-digit earnings also, led by SM Prime, I think grew 15%. Mega Road was 18%. Ayala Land also 14%. So the malls actually was very good. Announcements from Mon and Nissin also turned out to be very good. So far, nothing really concerning on the consumption. I think it recovered in the fourth quarter. So hopefully this year is an election year, and hopefully that provides some level of support. Banks obviously made so much money in the fourth quarter, ridiculous amounts. And you're starting to see more companies issue cash dividend. PNB had a large cash dividend. I think it was 2 pesos something that they were going to give away. For your information, PNB made 22 billion, I think. China Bank made 18, 19 billion. So even the tier 2 banks are just making so much money. And it actually makes sense that they're going to be issuing more cash dividend, more shareholder value. And really the highlight is SM, because they just announced a 60 billion buyback while everybody else has been buying back their shares. From the conglomerate end, you see AC buying back, AGI,
ICT also. ICT.
JGS. And funny part is LTG has actually been outperforming given their yield. So it's really been a dividend yield share buyback type of situation, in which have been outperforming so far. Any thoughts on the Philippines?
Alpha.
I think there's a solid investment case to start accumulating. But yun yung keyword, investment. Parang tingin ko kasi you're talking about trading. I mean, nobody cares about the fundamentals eh. I mean, it's all about flows eh. It's parang tingin flows eh, diba? So as long as like ASEAN is like not in favor, parang hindi ko alam, hirap. Hirap eh.
Well,
Okay.
where the market is located now in the Philippines, in terms of stage, ang nasa ano siya, diba? Accumulation or neglect stage, going out hopefully into stage 1. But yun, accumulation stage, really there's really no timing here. Mainly position trading. Really have to find an entry point or size properly to be able to sit on volatility before this comes out. So that's why you really have to take note of the fundamentals. Kailangan may fundamentals yung binibili mo. At
Okay,
least.
this was a discussion posed to, which I brought up also. Because if you look at the market today, 9 times PE, 2008, 9 times PE. Difference, one was coming from a financial crisis, the other one, parang wala.
Mm.
So the question was, I'm not saying it's not a buy. I think the market is still a buy. I think the question was, in terms of trading and deployment, because here you had a scare, and every time there's a scare, it's good. Let's say recession, there's a scare, okay lang eh.
A secular bull.
Kasi may panic selling eh, di ba? Yung
Secular.
problema dito, walang panic selling eh. So I'm running on the assumption here that things are very efficient, meaning it's 9 times PE because there's a reason. No volume, growth is still weak. I mean, better this year and fourth quarter, but the going concern is where do we go from here? So I'm also running the assumption markets are very efficient in pricing this in. Yes, it could be like 11 times PE, but can we really re-rate back into like 15 times PE or something, which is the historical average?
Yeah, that's the question.
That's the question, right? And it's very similar to because from a trader perspective, pag may panic, okay lang sumalo eh. Nag-gets ba ako? So it's like SM Prime was 22 pesos. Today it's 22 pesos, but this one had panic, okay lang salawin. Today, I don't know. Right? Did you guys get my point?
Yeah, yes.
This was okay, from an investing standpoint, let's call it quits, right? Okay, investing, again, just keep on investing. That's not the problem. The question here was from a trading perspective, because normally when you have a quick decline, usually the bounce is also quick, regardless of fundamentals, regardless of anything, right? Today it's not. So
Yeah.
I think the point being here was that you should also adjust your expectations with regards to how market should react, diba? Because everything has been going down slowly. So I'm running on the assumption that everything today is also running efficiently.
I think that case being the market being sold so parang slowly. I think if you remember nung pandemic, kasi may flash na rin dun eh. And for the past 10 years, foreign funds have been parang selling our market. And who stepped in yung mga locals? And I don't think there's enough bullets to cause that yung another capitulation. Just my kasi everything's kunyari, all these big boys are down there, like yung properties mo and SMs, ganyan. There was really no excess created at first. That's why I'm really not expecting any capitulation from here.
Fair.
I think to give some perspective, diba? Kasi capitulations happen talaga kung may ipit eh. I mean, just like, for example, in the US, I'm not saying it's gonna capitulate, but saying na, parang feel ko may naipit dito. Bull market for like so many years, huge inflows post-Trump, and now parang laki nung drop ng market and so fast, diba? So yun yung may potential mag-capitulate eh. Like the Philippines has been like down there for so many years now.
10 years ba? 15 years. Lost decade.
I'm not arguing. I think I'm just managing people's expectations. I think
that's advocate.
Because everybody's shouting, let's say 9 times speed whatsoever, but I don't think it's just gonna be like this, right? So that's my point being here. It's because if there's like capitulation, there's panic, usually the bounce is violent thing. So I'm just managing people's expectations because I think it's gonna be still long bottoming out process. But is it from investment standpoint you should be buying? My answer definitely is yes. But okay, last things about the Philippines before we end. Any questions on earnings? Did I miss anything?
Felix.
Oh, Felix. Interesting. So news that they're finally gonna go into production. They said they don't need to raise capital. I think they're lying. I think they're really pushing to place out
Yeah.
because it also makes sense. Because whoever bought in the last 2 months, I'm sure it's not institution. So it looks like it's a push to place out, which also makes sense. So people ask me about these things about Felix. 10, 12 years ago, the Silangan mine was supposed to have a 6 years production. Didn't happen. Now it's about to happen. And gold prices that back then were like 1,500 or probably less than that. Today it's $3,000 per ounce. So whatever they have not produced over the last 10 years, at least the value has actually been higher. I always tell people that. So don't worry about it so much. And of course, Felix is cheap if that's how you're going to be looking at it. Because all the resources that they have not been able to mine, now you're going to be mining at double the cost, at double the price.
If you're going to mine it.
Well, it looks like it. It looks like they're going to achieve that already first quarter. They said they don't need to raise money because they raised it already. I don't know. It looks like they're still gonna place it, but we'll see. We'll see. Okay. Last things you're seeing
I think
gaming markets still do well. I think Bloomberry is under the assumption that it will get kicked out of the index. And they're also trying to enter the online gaming space, but there's many regulatory news that's been happening, and I guess it's fair, especially because how much money and social impact that online gaming has to society. Okay, are we good?
yeah.
All right. Okay. Just to summarize everything we've talked about so far, really the highlight was the drop in the US and that narrative changing from US exceptionalism, which Jason talked about, into possible recession, which might be necessary in order to have its long-term sustainable growth going forward. Obviously, they have to go through some level of refinancing for their 9 trillion that is expected to mature this year, which we talked about before. That looks like the highlight, and that's the reason why you're seeing some flight to safety heading into the bond market and even out of the US dollar. So a lot of good things might also be happening, which might be better for inflation. Jason talked about the Ukraine piece should probably be better for euro, and that's the reason why you're seeing a strength in the European market. Nonetheless, looks like you're seeing outflow from the US head into Europe and into China. I think China has been the biggest winner so far last 3 months, and especially year to date. We're watching Hong Kong and China very carefully because we're really curious of whether you're going to see a decouple happen. And so far, parang meron. Okay. The other emerging markets haven't been that case. Philippines, we thought there might be some level of decoupling. I hope so. I don't know. But again, I'm just trying to manage people's expectations because this is still an investor market and this has to be looked at it from a broad level instead of looking at it from simply trading level where you might see a huge rally. If it does, good, bonus na yan. But I think you still need to have it and frame yourself as if it's in investing type of mindset. Good news is consumption has recovered in the fourth quarter. Hopefully for the full year of this year, you'll still see positive consumer sentiment, especially in the election year. And yeah, hopefully things do look better for the Philippines. We're positive, don't get me wrong. I'm just trying to manage people's expectations on how it should look like. With that being said, guys, that's pretty much it for today's Gap&Go, and I will see you guys 2 weeks from now. All right, have a good day, guys. Thank you.
Okay.
Thank you.